This video explores a crucial question. What happens if the US dollar loses its status as the world's primary reserve currency? What if one day the US dollar is no longer the world's most powerful currency? Not just weaker, but no longer the backbone of global trade, oil markets, central bank reserves, and international debt. Would America become poorer? Would inflation explode? Would a new currency take its place? China's yuan, gold, or even Bitcoin? Today, on Fincopedia, we explore a question that could redefine the global financial system. What really happens if the US dollar loses its reserve currency status? What is a reserve currency? A reserve currency is the currency that central banks hold in large quantities and that countries use to settle international trade and debt. Right now, around 60% of global foreign exchange reserves are held in US dollars. That means oil is priced in dollars. Global trade is invoiced in dollars. International loans are denominated in dollars. Central banks park their savings in US Treasury bonds. In simple terms, the dollar is not just America's money. It is the world's money. Why the dollar dominates? The dollar's dominance comes from four pillars. Economic scale. The US is the world's largest economy. Trust and stability. Investors trust US institutions and rule of law. Deep financial markets. The US Treasury market is the most liquid in the world. Geopolitical power, military strength, and global alliances reinforce confidence. Since World War II and the Bretton Woods system, the dollar has been the anchor of the global monetary order. Why countries want to move away from the dollar? In recent years, several forces are challenging dollar dominance: rising US debt and chronic budget deficits. Weaponization of the dollar through sanctions. China and BRICS developing alternative payment systems. Central banks increasing gold reserves. Digital currencies and cross-border settlement platforms. The concern is not collapse. The concern is gradual loss of trust and dependence. What losing reserve status actually means? Important clarification: the dollar would not suddenly disappear. History shows reserve currencies decline slowly, like the British pound after World War II. A more realistic outcome is a multipolar system where the dollar shares power with the euro, yuan, and gold. Global reserves are diversified. The US no longer enjoys monetary dominance. Consequences for the United States. If the dollar's reserve role weakens, higher borrowing costs. The US currently finances massive deficits because the world demands its debt. Less demand equals higher interest rates. Weaker dollar imports become more expensive. That means inflation rises. Loss of exorbitant privilege. The US can print money to buy real goods globally. That privilege would diminish. Asset repricing: stock markets, bonds, real estate, all would revalue under a higher rate, weaker currency environment. Global impacts. Worldwide effects would include volatility in currency markets, repricing of commodities, shift in capital flows toward Asia and emerging markets, greater role for gold and strategic reserves, regional trade blocs using local currencies. In short, the global financial system becomes less centralized and more fragmented. Who benefits and who loses? Potential winners: gold and real assets. Exporting nations, countries with low dollar debt, alternative reserve currency issuers. Potential losers: heavily dollar-indebted economies. US consumers facing higher import prices. Financial institutions dependent on dollar liquidity. Should we be worried? Despite the headlines, the dollar is not about to collapse. No other currency currently offers the same liquidity, the same legal protections, the same financial depth, the same global trust. What is happening is not replacement, but gradual dilution of dominance. In short, the future is not a post-dollar world. It is a less dollar-centric world. Conclusion: the reserve currency is the hidden foundation of global power. If the dollar's dominance erodes, it will reshape interest rates, inflation, geopolitics, and investment strategies worldwide. Understanding this shift is not academic. It is essential for anyone who wants to understand the future of money. If you found this helpful, hit like, share, and subscribe for more simple finance explainers.